Holy cow, we got it. We're live with Degen Day. It's Degen Roundup News Day on Wednesdays. So we're going to talk about all things not Bitcoin and ETH, which is kind of exciting, and all things not regulation. And again, we're joined with a good friend of ours, Patrick from Aero Markets. How you doing, brother?
I'm doing great. Thanks for having me.
Thanks for coming yet again. He's going to be here all week. So if you guys want to absorb all the genius that comes out of Patrick's mouth, then I'd suggest you tune in for the rest of the week. Patrick, do you want to do a quick little blurb? Who are you? What's Aero? Just so people can check you out.
Yeah, for sure. Patrick Kiefer. I'm a PhD economist and self-taught software developer, co-founder of Aero Markets. Check us out on Twitter at Aero Markets. Options trading on Avalanche, ex-US only. But go check us out and get involved with the community. There's a lot of exciting things happening within the next few weeks. So stay plugged into that. He's
being humble. Check it out. It's worth it. I promise. Okay, so we got lots of stuff to talk about today. We're going to talk about the Geo Bowden meme coin. We're going to talk about a meme coin challenge on BNB chain. We're going to talk about Doge. We're going to talk about Dog with Hat. We're going to talk about Notcoin, tech-fueled gaming startups, Parallel, and fashion and tech, and a little bit of a metaverse play. We got lots to cover today, brother. Are you ready?
I'm ready.
Are you ready? All right, let's freaking go. Let's do one of the old ones. All right, here we go. An oldie but a goodie.
I like the punk rock ones. Yeah.
I was going to say, I knew you'd appreciate the punk rock one. All right. So Trump fan or not, this is pretty hilarious. So essentially what happened is there's a meme coin called Geo Bowden, which is a play on Joe Biden. So the whole idea is that there's this meme coin that's essentially mocking Joe Biden. And so effectively, it's based on President Joe Biden. It's seen a dramatic increase in value, 170,000% increase in value, which is obnoxious. Since its launch, the token creators aim to raise awareness by encouraging investors to bring a Geo Bowden sign to a Trump rally in Michigan. So they're trying to get publicity because so many people that don't like Joe Biden also watch Trump rallies. They've used similar tactics before. They did a meme bracket challenge to gain traction. The rally and the involvement of Bowden investors could influence the project's success and the token price. I find this wildly entertaining. What are your thoughts on this thing? Is this just another stain on the space, or what do you think?
I think largely it's another stain on the space. I mean, I think it's interesting to be able to use the technology to kind of facilitate engagement about particular causes in this way. So I think kind of at an abstract level, this is interesting, and it's a type of thing that it just kind of emerges as a function of what's possible with the technology, and people just kind of like figure out interesting, cool things to do with the technology. So I really like that aspect of it. I don't like the politicization. I don't think that that's what the space needs. I think we're kind of better off with, and a lot of people aren't going to like to hear this, but I think we're better off with a relatively sympathetic attitude from people in Washington. And when we see things like this kind of carves out positions in Washington along party lines. And I think that's actually really harmful for the industry because for the industry, we've talked about this for years, for the industry to truly grow and truly kind of reach some of its highest potential numbers in terms of user engagement, in terms of the role it plays in the mainstream financial system. We're going to need to have some type of consensus on regulation. And I think this type of thing makes it much harder to get that type of consensus. This thing, the Elizabeth Warren one, I saw someone on Twitter when the Elizabeth Warren one came out, they were like, "Oh, we're all going to jail." And they were obviously, it was hyperbolic and it was funny, but I think my take is These things are cute, but ultimately, I think harm the image at a time when we actually should be looking for consensus in Washington.
Yeah, really interesting perspective. I hadn't considered the political impacts of this at all. I just thought it was funny. I also happen to strongly agree with you in the sense that meme coins, I've been saying this for years, meme coins are in many ways a show of immaturity of the space if meme coins are the prevailing narrative. Having said that, a meme coin in general doesn't mean immaturity. There's meme stocks in TradFi still, and it doesn't mean TradFi is immature. We just have, I think, an overemphasis on these meme coins, and we have way too many of them emerging relative to legitimate utility tokens and different projects. So for that reason, I'm not a huge fan. I totally agree with the politicization. Of course, I think it's funny because I'm definitely not a Joe Biden fan. So to me, that's funny anyways. Yeah. What I do like about this, though, is, I mean, it continues to show and reinforce that community is so important in crypto, in these projects. You first have to get that core community and then find really interesting, unique, and standout ways to activate them, to engage them, and to get, you know, really interesting narratives following the project. Yeah. I mean, yeah, I don't love necessarily the the exact approach, but I think I like the concept. I think it's really cool to kind of work on these guerrilla on the ground marketing tactics to try to create some virality. That's the only thing these meme tokens can do. They didn't raise money, most of them. They didn't have money when they started. They skyrocket because of really low liquidity. It's deceiving, 170,000%, right? But only one person can sell there, and then it's 50,000%, and then it's 10,000%. You know, so it's not like everybody can actually exit in deep liquidity. So there's a lot of misleading information. Anyways, all of this to say, I think it's funny, which is why it's in here today. But I do agree. I wish we didn't see this, especially now when we're all just hoping for some positive favor from the regulatory overlords. We'll see. Okay, speaking of meme coins, Binance, we talked about this, actually, something similar last week, where Avalanche has done an exclusive, they created a small fund that they're going to support meme coins that launch exclusively on and build community on Avalanche. Well, here we are. Binance has now come out and said that they're going to do the same thing. And they're calling it the BNB Chain Meme Innovation Battle with a prize pool of up to $1 million, which is kind of cool. The contest encourages developers to create the next viral meme coin on the BNB chain. Participants have until April 9th to register, and the competition will take place the following day. The prize pool is dynamic and depends on trading volume of the qualified memes during the competition period. The rewards will be distributed based on rankings in total trading volume, market cap, and meme community holders. I can think of so many ways to game this, but it'll be pretty interesting to see how it comes out. Do you think that this is $1 million spent on the right stuff? Or what's your opinion on this?
I mean, I think from their standpoint, from a business perspective, it makes sense. And again, it's part of it is to kind of capture or harness this phenomenon that, as you pointed out, has kind of arisen endogenously, right? The technology gives us the ability to create these new coins at very low cost. And, people could have done anything with those. And the kind of meme coin phenomenon is like a bottom-up kind of grassroots phenomenon that emerged endogenously from the community of crypto users. And I think from that standpoint, it's very interesting, almost as like a natural phenomenon. It's very interesting. And so if you're someone like Binance or Avalanche, you talked about their meme coin fund as well, I think it makes sense from a business standpoint.
From their perspective, for sure. I mean, more trading volume, more gas fees, more revenue from DeFi. Totally get it. I also think that it is an interesting way to build community. I struggle with the type of community that it builds. Are the meme Degen people the ones that these exchanges are really trying to cater to? Maybe. Or these networks really? Maybe. I'm just not sure if there's enough liquidity long term and enough stickiness of those individuals to really move the needle longer term. But having said that, $1 million is not nothing. It's enough in a prize pool that they, it's kind of the fact that it's only one day to me kind of feels gimmicky, because it's like whoever can get the most traction in the first day. Well, I mean, there are some ways to game that, obviously, and so it will be interesting to see how it goes. I think it's cool because when nothing else exciting is happening, I guess this is what you can focus on. But we'll have to see. I don't know. Meme coin. I always struggle with meme coins. This is like one of my hardest things to talk about, which is obviously also present when we talk about Doge. So we can cover the Doge situation a little bit. We kind of briefly touched on this yesterday because liquidations were extraordinary on some of these assets, obviously with the BTC ETH movements yesterday. Doge ripped up to a 2-year high and then dumped. I think it was like 15% or something. 17. Wait. What was the percent? It doesn't say the percent in the article. But anyways, it surged above 22 cents, which is like kind of crazy. Like I think it was like a $60 billion market cap or some nonsense. Like I was just like, what the hell? Anyways, it's a 2-year high before giving up almost all of the gains that it had. It was driven by enthusiasm over potential integrations with X payments and anticipation of the new Dogecoin related IEO called Dogecoin 20. It'll be
I'd be curious. Yeah, go ahead, sir.
Oh, it's just Dogecoin 20 is an Ethereum-based project allowing investors to earn staking yields. There's a lot of this is based on anticipation of Dogecoin futures set to be launched on Coinbase, which could improve liquidity and speculative opportunities. Like the fact that Coinbase is supporting Doge is like hilarious to me. The fact that Elon Musk is, I think, thumbing his nose at Doge. I don't even know. And the whole thing just confuses the hell out of me. But people are probably more interested in your thoughts than mine. So what do you think about this? Do you like Doge?
I mean, Doge is funny. I mean, I wouldn't have put any money in it, but it's very well known. I mean, I remember talking about crypto with my wife's little brother 2 years ago or even more. And that was the only thing he knew about crypto was Dogecoin. And so he was like asking about Dogecoin, and this was years ago. So Dogecoin is definitely part of the way that crypto kind of permeates into the pop culture, which is interesting. But going back to the question about the meme coins in general, and the point about the Binance Fund and the Avalanche Fund, one thing that I'm actually not sure about, maybe you have a better sense of this, is does each new meme coin bring on new users, like new traders to Binance, or onboard new people to crypto? Or is this mostly the same Degens that have been trading Doge and SHIB, and now they're trading the new ones too, and there's not really new users coming in?
The thing about meme coins that gets me, like, I mean, I've got a lot of friends that have been shitcoin trading for the whole time we've been in the space, and I've been known to shitcoin a little bit over time. The thing with meme coins is like it's really a 24-hour-a-day bull market situation. Like you can't just buy a meme coin and like hope for the best. Usually, like there's a bit of an art to it, a bit of a strategy, and getting in early enough and figuring out if it's a scam, getting out early enough. And for that reason, I think the vast majority of people that actually make money on these, I don't think this, I know this, are the same very small proportion of the community that makes all the money because they know how to do it, and the rest of the community are the ones that give them said profits. And so I struggle a lot with meme coins in general. I do think, to your point, that it is probably the majority of it is the same people just looking for the next major meme. It's kind of that like opportunistic capital. We talk about a lot of the liquid funds or like kind of quasi institutions in crypto that just travel around from chain to chain, soaking up liquidity mining where it's most attractive. I mean, I think meme coins are kind of the same. They just go from chain to chain where the momentum's the best and take as much off the market as they can. I don't know.
If it's not even bringing on new users, then you could make the case that it's kind of net harmful to the industry. I mean, because it hurts so much in terms of the image of the industry, not just to the kind of public, to pop culture, but also, as I mentioned before, to policymakers. I mean, the meme coins, in addition to some of the crude names that we've seen, the meme coins are, as you were pointing out, most ripe for manipulation. So, maybe the SEC doesn't care about if the names are crude. Maybe that would be FTC or something. I mean, I don't know, right? I mean, there would be some other agency that would be charged with being offended by that. But
somebody's got some rent to seek there.
Exactly. But the SEC is looking for things that are easy to manipulate, and the meme coins are the easiest things to manipulate. And seeing a proliferation of them in the kind of early stages of this bull cycle has been a little disappointing, because I was hoping to see something a little more mature happening. I mean, we do see, and maybe what we're going to see is kind of more bifurcation between kind of the professional wing and the degen wing, because you do also see some of these developments on the more professional side, obviously with the ETFs, but also there was this announcement from Carlos from Securitize, who we know, last week, announcing the BlackRock fund, the HODL fund, which the dividends are paid on chain and so forth. And so I worry that the meme coins are kind of taking over the news cycle from some of these other actually more substantive developments that help push the industry in the right direction.
Yeah, before we jump away from Doge, I mean, you made an interesting point that it may be more net harmful than it is net helpful, some of these meme coins. And I actually agree. It may attract new people from pop culture or whatever, but by the time that those people have seen enough signals socially to then go and make a decision, if you remember the first time you had to buy something on chain, how easy was that? It wasn't. It was very confusing. And like, there's a lot of friction that happens between somebody hearing about a meme coin who has never participated in crypto and then getting to the point of actually buying said meme coin. The problem is, I'm pretty confident a very, very high proportion, if not almost all of those people, lose money. So yeah, we introduce people to the space into the most violent and unpredictable environment possible, with a whole bunch of manipulation vectors and all of these other things. And we think that that's going to be a great first introduction to the space. Absolutely not. If anything, it's turning more and more people away from the space in general. So, okay. Ascending Man brought up a good point. BNB used to be meme central, and Solana has kind of started to take that over a little bit. So we've got Dog Whiff Hat. Are you a Whiff owner?
I am not.
Neither am I. Full transparency. I don't own a damn Dog Whiff Hat token, but it's experienced a significant drop, losing 17% of its value in the past 24 hours. Not surprising. Pretty common across the space. The decline is a part of a broader market pullback that has affected major cryptocurrencies like Bitcoin and ETH. The recent sentencing of SBF and cooling demand for spot Bitcoin ETFs have contributed to the overall downturn in crypto prices. Despite its recent decline, WIF has shown volatility and appreciation in the past month, with notable rally leading to an all-time high of $4.83 on March 31st. So common thread across most of these meme coins and pretty much everything that's not, a blue chip top 20, is that BTC, ETH go down, some negative market sentiment, and everything else follows for reasons probably unrelated to each individual project. Meme coins in particular were hit the hardest because they're fueled by, people buying memes is fueled by this perception that the market's just going to continue to blow up forever. And they're going to continue to make all this profit, so they're happy to gamble on these little meme coins. But as soon as you think, oh boy, there might be something slowing it down, everybody sells the meme coins because they're so violent in terms of volatility. So I don't know. Again, do you think Solana is poised to be the meme leader this cycle, or kind of what are you thinking? I struggle with Solana, to be honest, because it has an insane market cap for, I don't think, any reason. Like, I don't understand why people are crazy about Solana. If someone wants to, in the chat, let me know what you love about Solana and why you're most excited for it. But they seem to be leaning into the meme coin and AI kind of narrative. So I don't know. What do you think? Solana is that gonna be its claim to fame this year?
I mean, we'll see. It kind of already is, right? I mean, there have been so many of these meme coins that came out on Solana, either, first or only. So it has been interesting to see that little pivot. I mean, I think what interests people about Solana is just this trade-off, the way they've calibrated the trade-off between kind of security and performance, which is kind of fundamentally a trade-off that all of these, layer ones and layer twos have to make. And so, if you're comfortable with a little less security and more performance, which may be better for financial applications, I think that's been Solana's kind of pitch from the beginning, then maybe you're bullish on Solana. There have also been some interesting things on Solana that aren't meme coins, like Jito, I think is actually very interesting tech. And we spoke about that a little bit yesterday, and they're kind of building on some of the insights about MEV that came out of the research in the ETH community. So I don't think Solana itself is all hot air. I think there's a case to make that there's, Solana is substantive and that there could be value there. The meme coins themselves, though, I don't think are, obviously we were just talking about this, I don't think they're a good look. I don't think they obviously also don't have intrinsic value in the way that other assets have. I mean, if anything, the fact that a lot of these meme coin producers are transparent about that is a redeeming quality, right? A lot of these meme coins, if you go look at them, if you go to their websites or their Twitter, they're like, this coin does nothing, right? I mean, they're not trying to pretend that you'll get some dividends in the future if you hold it or something. It's pure speculation. It's pure, can you kind of time when the herd is coming in and coming out? And so, I think, like I said, to the extent they're transparent about that, that is a redeeming quality. But overall, no, I don't think it's a great look. But I also don't think it means that Solana doesn't have anything of value. I think, personally, I would keep an eye on Solana over the next couple of years. I think there could be some interesting financial technologies built out there. And I mean, we know some people building on Solana who are serious.
Absolutely. Yeah. And I mean, I'm glad that you and I are talking about this, because I've always been not really a fan of Solana. And I know that over the years you've been interested, or at least tracking what they're doing and some of their technological benefits. So thanks for sharing that. We were going to talk a little bit about something on the TON network, but I think we're actually going to pass over that and talk just a little bit about gaming to round out the show today, because we can't forget about gaming. Of course, there's last cycle, there was a lot of narrative around gaming, but not too much substance. And now the substance has been developed, and we're seeing some really cool things come out of the gaming markets. I think first and foremost, what's pretty interesting is Andreessen Horowitz announced a $30 million investment in tech-fueled gaming startups through its early-stage accelerator program, Speedrun. The program aims to support up to 40 companies, so a little less than $1 million each, $750,000. The investment will focus on startups working with AI, VR, AR, and Web3 games. A16's Game Fund 1 has already invested in notable companies like Roblox, Sandbox, and Sky Mavis. The Speedrun program provides capital, industry coaching, mentoring, and access to a community of ambitious founders to help startups grow in the competitive gaming market. Do you like this move out of A16?
I mean, I'm not surprised. I mean, obviously gaming over the last couple of years has been garnering a significant fraction of mind share in terms of people building in Web3. We saw Avalanche also embrace gaming a couple of years ago. I'm not a gamer. It's hard for me to kind of judge the potential here. My understanding is a lot of serious gamers don't like Web3 games. So I think there still is kind of a significant hurdle there. But it's hard for me to gauge whether this is kind of a channel that could blow up in the future. It very well might. I'm not sure. One thing that is, I mean, this came out of Andreessen Horowitz, so we should maybe compare this to, I think they just announced an AI fund or something that was hundreds of millions, or more even. So I think, this is still
a relatively small play for them. And, I think if you look at the size of this play versus some of their other exposures, I don't think it's right to interpret this as A16Z thinks Web3 gaming is going to be huge. I think it's just something they want to have some exposure to, but they're much more bullish about, AI and some other things.
Yeah, 30 million to us seems like a lot of money. But to A16, I mean, their last fund, I think, was 5 billion or something, like their last major fund. So, I mean, 30 million is a rounding error on 5 billion. That being said, I kind of live on the fence on this one. I struggle with incumbents coming in and having too much ability to control the space. We're seeing that with BlackRock. We're seeing, BlackRock applies for an ETF and boom, ETFs are approved now. Who knew? And I struggle with the opportunity for incumbents being so much greater than new participants. The incumbents lost their chance to innovate. They stopped innovating, which is why the space has evolved the way it has. And I think we're giving them too many opportunities to not have to learn the lessons about innovation from their mistakes. So I struggle with that as a general rule. I struggle with incumbents from outside the space coming in and having an outsized opportunity relative to everybody else. That being said, I think gaming is really poised for some momentum here. And to your point, I'm also not a gamer, so I'm probably not an authority on this. That being said, last cycle, the criticism from many gamers that I know was that Web3 games were very basic, very pixelated, like the graphics weren't good, the performance wasn't good. And I think that was just a misconception or a misunderstanding of what Web3 gaming actually is. And I think now what we're seeing is AAA games like Shrapnel, and I know Activision has something that they're doing, and there's quite a few like major gaming studios now that are close to, if not have released some of these AAA games that are Web3 enabled. The game engine doesn't live on Web3 and probably never will. Maybe not never, but we need much more performant and much greater storage capacity to run a game engine on a chain. But that being said, I mean, a lot of these AAA high quality games now are creating marketplaces and like the tools and equipment and gear and all that shit that you can earn and buy in the game, you own via NFT and can transfer accordingly. It's pretty cool. Like I think, many of the criticisms of the last cycle around gaming have completely changed. It's because there was originally it was like Yield Guild and like Axie and games like that were kind of a little bit Ponzi-esque in terms of their emission structures and all that stuff. Now we're seeing, in my opinion, a lot of the gaming, VR, AR, metaverse stuff is trying to actually appeal to mass market, not just to degen crypto crowds. So I don't know.
I mean, it's a really interesting point. It's a really interesting point, and I think it brings up, I think, another important point, which is, one thing I have been interested in, to the extent I've looked at some of these gaming projects, is kind of some of the architecture engineering they have to do, and these decisions about what components to do on Web3 and what components to do on a server or some other service, right? And these kind of hybrid architectures, these decisions about how to engineer the architecture between the on and off chain components, to me, that's really interesting, because I think these are fundamental ingredients for financial applications as well. What you want to be able to do is, there are a bunch of things in your kind of workflow that require trust. And what you'd like to be able to do is kind of modularize that trust so that you can put some pieces of it on chain and keep some pieces of it off chain. You keep the pieces off chain where the performance sacrifice is too high of bringing it on chain, right? And these decisions about how to kind of separate these trust modules and these hybrid Web3 architectures, I think that space to me is fascinating. And so I don't want to discount some of those engineering decisions that the game developers have to make. I think these decisions and thinking about putting the applications together in this way is extremely important and valuable.
Yeah, we've talked about this a few times, and your insight has always proven valuable, at least to me. But yeah, like it's that contact surface between like centralized and completely decentralized. There is a space, and it might be something similar to the center of a Venn diagram or something. It's like that's the sweet spot, if that makes sense. We'll have to wait and see. I think you're right. We up until 10 minutes ago, we've all had this: either you focus on decentralization, period, or you focus on performance. That's generally the trade-off in many ways that you're making. TradFi, centralized. Everybody loved the centralized nature because they had control and insight and yada yada. Is a world of complete and utter decentralization possible? No, I don't believe so. And so what that tells me is, instead of trying to live on one of the two poles, we have to find some middle ground. And I think, gaming is showing that, because they don't have an option of putting it all on chain if it's a high quality game. So they have to make those trade-off decisions. And so we'll have some good case studies of like how those trade-offs play out.
Exactly. And on-chain trust isn't as important for rendering the graphics. It's much more important for what are the criteria for transferring value, when is value transferred, like those types of questions. That trust is important to move on chain, and unless the alternative would be you have an expert that you trust, and we can get into that. I'm not sure how common that is in gaming, but I think the way these systems are designed, that's kind of the calculus, is the trust in terms of transferring value. When are the criteria met for transferring value? Who gets transferred value? All of that is delegated on chain. But why would you also delegate like rendering graphics on chain? You don't need the trust in the same way for rendering the graphics, right. And so you can put that off chain. So
there's a lot of parallels.
I think this,
Sorry, there's a lot of parallels to that with financial products, right?
Exactly.
There's a lot of things that really don't necessarily need to be on chain and are maybe better served off chain, actually, in a lot of ways. If we can do it in a way that can be trustless, the off chain stuff with roll ups and different things. Can be pretty interesting.
Shameless plug. Check out. Hold on. Shameless plug. Check out at Arrow Markets and check out my Twitter at 0xprotean, because we've spent a lot of time over the last couple of weeks talking about this modularization of trust and how that entered into our kind of architecture decisions at Arrow. So please check it out.
And just follow Patrick's Twitter, because he posts some pretty awesome Substacks once a month. I'm definitely a fan. So, all right, Patrick, thanks, brother, for another great day. Our Degen Roundtable gentlemen and everybody else that's watching live, thanks for joining us. Super, super pleased to have you all here. As always, we're a live show. So if you make comments on our YouTube page, if you're watching on Twitter and you want to comment, go to YouTube. If you make comments, we see them live during the show. And happy to respond, hopefully, and address questions, concerns, criticisms. Please let us know. Like, share, subscribe, hit the bell, all that crap. We're trying to get the word out and help people dispel a little bit of FOMO and a little bit of FUD and approach this market objectively for this cycle. With that, Patrick, I say to you today, go FUD yourself, my friend. Have a good day. Later.